Thank you for joining us at XM.com. This is the Weekly Outlook. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian to have a look at this very exciting week. It has a lot of events, Rafi, to keep investors on their toes. Apart from 3 central bank meetings, we also have a barrage of data coming up. Starting with the United States, though, the Federal Reserve meets on Wednesday amid hawkish rhetoric and a 50 basis points rate hike essentially fully priced in. Nonfarm payrolls are also out on Friday. Therefore, what could this week hold in store for the dollar?
Well, Christina, it should overall be a positive week for the dollar. Now we just got the GDP data for the first quarter that showed a surprise contraction, but this was down to weaker inventories and widening trade deficit. The underlying economy is strong, and the ISM PMIs coming up next week for April are expected to confirm that growth does overall remain fairly robust. The jobs report for April should also come in at a fairly solid print. We're expecting NFP to rise by 400,000 and the jobless rate holds steady at 3.6% in April. As for the Fed meeting, I think a rate hike of 50 basis points has been well telegraphed by the Fed by now, and we also finally got some clarification on the balance sheet from the minutes of the last meeting. So the Fed looks set to begin the reduction of its balance sheet by allowing $95 billion in bonds and securities to roll off each month. It's therefore looking unlikely that we're going to get any surprises from the Fed, and Powell will probably reinforce the need to hike rates until inflation has come down closer to their 2% target. The problem, though, for the dollar is that it's already gained quite a bit over the last couple of months, and so further gains are likely to be limited, especially if we get either fresh speculation that inflation is peaking or geopolitical tensions subside a bit.
Well, on the other hand, we have the Bank of England, which meets on Thursday, and we've seen it pull back from its hawkish rhetoric lately, therefore making this week's meeting all that much more mystifying. Do you think we will see a rate hike this week?
Yes, I think another 25 basis point rate hike is pretty certain. And despite the toned down hawkish rhetoric, the BoE isn't about to pause its rate hike cycle just yet. I think worries about growth is something that will weigh on policymakers' minds more later in the year. In the meantime, inflation is too high and still rising. And I think this cautious approach compared to some other central banks, as well as the question mark about the balance sheet, will probably keep the downside pressure on the pound. The bank had earlier indicated that once the bank rate hits 1%, which is going to happen at the next meeting, if they do go ahead with that rate hike, it would start to the BoE would actively sell UK government bonds, but it's possible that policymakers won't make a decision on this just yet and push it back a bit until things settle down with respect to the Ukraine crisis, because we've had quite a bit of volatility in the bond markets. So delaying this would be another dovish signal for sterling. Having said that, we are going to get the latest quarterly projections, and if there's a significant upward revision to the inflation forecast, that would be something that could boost the pound, as it would suggest that the aggressive rate path that markets have priced in isn't perhaps too unrealistic.
Let's cross into Australia now. We got a hot inflation print a few days ago, which sparked renewed expectations of monetary tightening by the Reserve Bank of Australia. Do you think policymakers will signal a rate hike this week when they meet on Tuesday?
So this is the big question, and if you look at the data, there's no reason why the RBA should delay a rate hike until the June meeting. The problem is that there is a general election in Australia on May the 21st, so it would be politically sensitive for the central bank to begin raising rates before then. Although it's worth pointing out that the first rate hike is expected to be a smaller 15 basis point move, so the RBA might not see it as that much of a problem. Another worry that the RBA has to think about, though, is slowing growth in China, so that's something else that would give them an excuse to wait potentially until June. Either way, markets are betting that the RBA will have to be more forceful in the second half of the year, and that, along with the rally in commodity prices, this has been helping the Aussie to be one of the better performing currencies against the US dollar this year.
And before I let you go, Rafi, let's have a look at the data front, because Canada and New Zealand are releasing their jobs reports this week for April. Could the data provide a boost or any support for the Loonie and Kiwi?
Well, we could see a small boost because the labor markets in both Canada and New Zealand are quite tight, and that trend is expected to continue for a while longer. Obviously, a strong labor market does give the green light to more rate hikes, and we've already seen both the Bank of Canada and the Reserve Bank of New Zealand raise rates by 50 basis points at their last meetings. But the Loonie and Kiwi haven't been able to benefit much from this because of the strength of the US dollar. So should any gains from the data if we're going to get any gains, it will likely depend on whether or not we get some sort of a pullback perhaps in the US dollar over the next few days. In general, however, the downside risks are greater for the Kiwi. It's worth to point this out at the moment because of the China risks and broader fears about a recession. Whereas for the Loonie, there could be support from next week's OPEC meeting, where the major oil producers are expected to stick to their existing output plan, even as oil prices stay elevated above $100 a barrel.
Rafi, thank you for joining me today. This was the Weekly Outlook here at XM.com.